Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 21st, 2025, and we're diving into Washington Trust's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Washington Trust, the oldest community bank in the nation, has just released its Q1 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Washington Trust reported a net income of $12.2 million for the first quarter of 2025, translating to an adjusted EPS of 61 cents. John, how does this compare to expectations?
Well, the adjusted EPS of 61 cents slightly missed the forecasted EPS of 62 from analysts. However, the net interest margin saw a significant improvement, rising to 2.29% from 1.95% in the previous quarter. This indicates effective balance sheet management, despite a provision for credit losses increasing to $1.2 million.
Non-interest income and expense analysis. Non-interest income and expenses are crucial for Washington Trust. Can you break down these figures for us, John?
Certainly. Non-interest income was $22.6 million, bolstered by a $7 million gain from sales leaseback transactions. However, adjusted non-interest income was slightly down at $15.6 million. On the expense side, non-interest expenses rose to $42.2 million, primarily due to a $6.4 million pension plan settlement charge. Excluding this, adjusted expenses were $35.8 million, reflecting a modest increase from the previous quarter.
Asset quality and loan portfolio. Asset quality is always a concern for banks. How did Washington Trust fare in this area?
Washington Trust's total loans stood at $5.1 billion, with non-accrual loans slightly decreasing to $21.6 million. The allowance for credit losses was $41.1 million, maintaining a healthy coverage ratio. Past due loans also saw a reduction, indicating improved loan performance and effective risk management.
Capital and dividend strategy. Let's talk about Washington Trust's capital position and dividend strategy. What are the highlights here?
Washington Trust's shareholders' equity increased to $521.7 million, with a total risk-based capital ratio of 13.13%, well above regulatory requirements. They declared a quarterly dividend of 56 cents per share, consistent with previous quarters, and the book value per share rose to $27.06, reflecting strong capital management.
CEO's perspective and future outlook. Finally, what did the CEO have to say about these results and the future outlook?
CEO Edward O. Handy III emphasized their focus on balance sheet management, which led to a 34 basis point expansion in net interest margin and a 4% growth in in-market deposits. Despite a slight decline in wealth management revenues, the assets under administration remained robust at $6.8 billion. The outlook remains positive as they continue to adapt to market conditions.
Key takeaways. In summary, Washington Trust delivered a solid performance in Q1 2025 with strong capital management and a focus on balance sheet optimization. While the adjusted EPS slightly missed expectations, the overall financial health and strategic initiatives paint a positive picture. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Washington Trust's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Washington Trust's performance in the comments below.